Hello everyone, my name is Grega Horat and welcome to a new video analysis in which we will cover, just a second, in which we will cover dollar index, euro dollar, cable, Aussie, gold, crude oil, S&P 500 and Bitcoin. So before we go forward, we want to firstly take a look at the dollar index and where I think we are standing. Well, dollar index is falling in 5 ways, very aggressively from 2016 highs. So definitely dollar index or dollar in general is currently still in a downtrend. But what we have seen, as you know, we have expected a fifth wave of decline. And normally once 5 waves will unfold, market will reverse into the opposite side, at least in 3 waves. Okay, but since I think that this 5-wave decline can be part of an expanded flat correction in wave 4, I'm also prepared on a potential bullish scenario where rise or turn in dollar index into the bullish case could be in 5 waves. Okay, so when it comes to, let's say, for prediction for the first part of 2018, I think the dollar index will bottom and will rise in minimum 3 waves. Okay, so I think that dollar index is in the final stages of a downtrend, and if that's the fact, then we know that euro dollar will also came down from the highs after wave 5 is completed. But before we can say that this current cycle is finished, we need 5 subwaves within wave 5. If we take a look on this current decline, you can clearly see that this was probably wave 1, wave 2, and we are now still missing this wave 4 and wave 5 to complete the current weakness. So there is room actually, let's say, for 89, maybe even 88.50 before this downtrend can be finished. But what we really have to consider is that if we'll see any reversal earlier than we think, and if the reversal would be in 5 waves from the lows and above this trend line resistance, then clearly we may turn bullish earlier than we think. But for now, trend is still down. Also, on the 4-hour chart, what we see is that market actually slowed down over the last few days. So probably that's sign that we are in a corrective phase, in minor correction within this ongoing downtrend. So I will be expecting ideally for a push towards higher levels within this wave 4 pullback, ideally back towards 91.75. This was the starting point of a wave 4 of one lesser degree, which also can be seen as a resistance if we consider that fifth wave of decline was quite extended. So when you have a fifth wave extended and you expect a wave 4 correction, this correction can retrace only to the starting point of a wave 4, which was here at 91.75, and not necessarily up to the ending level of that wave 4, which was at 92.70, which normally would be the case when you have extended third wave within a previous 5-wave decline, not fifth wave. Okay, so dollar index, we expect a temporary bounce, then more weakness, and then ideally we will see a new turn to the upside in 5 waves, and then we will be looking ideally, as I said, for a push higher into wave 5. So if that's the case, then obviously we are in similar situation here on euro dollar, where I see market maybe forming an ending diagonal here for a wave 5. For a wave C of B, not wave 5. So we are also tracking a flat correction within this ending diagonal. So an overlap with wave 1 is another problem here, because normally in ending diagonals you will see wave 4 moving into territory of a wave 1, and normally that happens because whole decline is not that strong anymore. So extended or third wave within that 5-wave movement in an ending diagonal was not that strong. So it's not a surprise that you see then a pullback back into the territory of a wave 1 or wave 2. So where we are standing here is probably also the same as on dollar index in late stages of this 5-wave rise, which ideally is going to be wave C of wave 4. So we are probably in late stages, and I ideally will see a reversal in February. However, as I said, there is definitely possible that market already bottomed here, okay, and that we will see move to the upside. But in such case, okay, even if you say that low is in, you would expect a 3-wave retracement, ideally back to the previous wave 4, okay. So no matter if we are bullish on the long term or bearish, I still think that lower prices will come on euro dollar in let's say in first 6 months of 2018. Also on the 4-hour chart, what I see is similar thing like on dollar index. I'm tracking wave 4. Now here wave 4, as you see, price action is going a little bit sideways. So this wave 4 can actually also be a triangle. If it's going to be a triangle, then triangle, because these are sideways corrections, then you may not see so deep pullback in price, but rather longer in time. It means that maybe we'll not even see this retest of the support at 1.2090. Okay, but still this would be ideal level for a bounce if we get towards these levels. If we get down to this zone and if we see a reaction to the upside from there, I would be very interested to join the final piece of the puzzle that can even cause a bounce towards 1.25. Okay, so euro dollar also the same thing. As I said, also what I want to highlight is that euro dollar has actually very good correlation with German bonds. So I will take a look at this market. You can see here we have German Bund in an uptrend. So now I will put in a correlated chart. And why I will do that is because this count actually and correlation with German Bund is helping me to predict where euro dollar will move on a longer scale. So I want to add and compare Bund with euro dollar. And as you can see here, euro dollar, okay, from 2008 has been bearish. At the same time, we have seen move to the upside on German Bund. And the question is German Bund turning from the highs in 5 waves, or it's in a corrective pullback? If it's a corrective pullback, then we know that this is probably only a temporary pause with an ongoing uptrend. So if we'll see more gains on euro bonds, it means that euro dollar could come under pressure if we consider that correlation is still somehow in place since 2008. So bonds are bullish, just now sideways, which means that euro dollar can also then be just a sideways with a downtrend. Okay, and if we take a look closely, it's a little bit slow price action here on German bond actually since 2016. So I think it's a wave 4. And wave 4 can be also even a triangle here. Okay, so it's very important, the current structure that I see, it's very important for the next, let's say for the next 12 months of price action, maybe even more. It tells me that we are in a corrective phase. The only question is this triangle the whole part of a wave 4, because triangle can occur in a wave 4, or is this maybe only triangle in wave B of wave 4, which means we can see lower levels and then bounce. But in either case, this decline, okay, from here and the bounce from here cannot be labeled as a wave 1 and then maybe wave 2, because we have here some kind of a triangle, and triangle cannot occur in wave 2 position. So either we are going to see move to the upside, spike below these levels and then turn higher, or we are going to stay sideways to make a triangle in the whole structure of wave 4 and then push to the upside. Okay, but in either case, I see this movement, okay, as a corrective with an uptrend. So when uptrend will resume here, ideally in 2018, that's when I will expect euro dollar to come lower because of this correlation. We are here seeing downtrend on euro dollar since 2008, when German bonds were trading to the upside. Now let's take a look on the next market, which is going to be cable.